Well, good afternoon, everyone. It's 1:15 here on Tuesday, the 17th of May. I'm looking at the gold market. I've been waiting on the gold market for quite a long time now. I could have been short in this period, but I wasn't. I've just drawn in this very simple equidistant channel, which is a very, very useful indicator. I know it's simple and trivial, but as you can see, this market has, the gold market stopped pretty much on a sixpence right at that level yesterday. I just drawn, and clearly that's where the orders were. This is just my old 8-period stochastic, and this day it's a daily chart, so it's an 8-day stochastic. As you can see, this fell, and that in fact made a slightly rising bottom, so that's a divergent signal. Now, if I went to a weekly chart, the weekly 8 is also, and a weekly 8-week stochastic is a very useful asset allocation device. As you can see, it in fact charted a hammer candle pattern. It finished right on the highs, and I've taken a small position this morning. We shall see how it went. It's slightly up at the moment. It's a tiny position that I'm hoping that I'll be able to add to on any weakness over the next few days. The trade, I expected this market to stop sooner. It went lower than I thought it would. It went back into this range, which is not great, I must admit. In terms of an Elliott perspective, there's what's called here an overlap, which is takes away from the trade. But with any luck, we're going to get to that 1940 level, and that would be a really nice little trade that I'm hoping I'll be able to add to. So I shall be looking at the hourly chart. Hopefully we'll get a spring set up on the hourly chart. The stock indices, especially S&P 500, also stopped on a sixpence on one of these equidistant channels. However, there was a lovely AB equals CD. In other words, this wave and that wave were the same on the SPX. The level in the SPX was 39.35, and apart from an intraday move, that 39.35 level held. The S&P opened up in London this morning, and it's sitting at very, very important resistance now, somewhere about 4067. That's a critical level in the S&P, ladies and gentlemen, and certainly the bulls will be very glad to see the S&P get above 4067. I see similar turning points right across the market, as I'm saying on gold here. For example, the euro dollar could quite easily be at a major turning point. I think gold is. The stock indices are, and although I don't trade Bitcoin looks as if it wants to turn as well. So, and those of you that have been at this for a while will know that they all are totally, utterly interrelated. A very good exercise is to spend a month hand charting the S&P 500, gold, oil, and maybe silver, and maybe one of the bonds. And if you do that for a month, once you update one of them by hand, you pretty much know where the others are going to go to. That's a very good exercise for anybody to do. Just do it for a month, every day. Just in your on a piece of graph paper, just put the high, the low, and the close is fine, and you'll find that that'll build a really, really good feel for where these markets are going to at a subconscious level. So I recommend that to anybody. Okay, folks, that's all for me. Just a little worried that this leg down impinged into this range. That takes away from the trade from an Elliott perspective. Thanks very much.